Good morning, folks. Welcome back. As a reminder, it's going to be a short session today. I am not feeling well. My back is killing me. I got a couple of emails real quick asking how my back could have been thrown up by my dog. My dog's 65 pounds. And in March of 2009, I had a really bad motorcycle accident, and I compressed my spine. So I've had a torqued up back since then. But she really torqued me to the right more than I was expecting, and it's all tore up. So I'm really uncomfortable. So I'm going to outline the CAD in the Euro this morning, and then I'm going to escape again. I got a doctor's appointment that I have to be at 9:30 today. So this is our economic calendar, and we can see the manufacturing sales numbers due out for Canadian dollar, and then we have the building permits for the dollar index. So again, 10:30, we have crude oil inventories, so they're probably pushing CAD around a lot. Let's go over to the charts. All right, so on the dollar, we didn't get down to the 94.45 level yesterday, and I think we might get there today on the news that we get at 8:30 or so, or even the crude oil inventory numbers. They might send us down here to hit the 94.40, maybe even 94.20, get some expansion down. If we run above the equal highs that they've posted here, that might be the manipulation at the news release. And let's frame that. Disregarding this wick as a stop run, I want to go back to this reference point here. It comes in at 95.03, so basically 95 big figure. So we'll just round it down to that, given that's the case. So I'll let the use now. It's not the wick that I'm using here. It's this low, but we want to get ahead of it, so it's the big figure. So they could spike it up there on the news at 8:30 or at 10:30. So if we don't see the manipulation, they say they keep it in a tight range. We don't take out the low from yesterday, and we don't take out these equal highs at 8:30 to 9 o'clock. At 10:30, when the inventories come out for crude oil, anticipate that as a potential run. And then if it gets up to that level, we could see it run down, then eventually take out yesterday's low. But it would have to consolidate prior to. Ideally, we want to see it run up there, hit that at the 8:30 news event, and then reject and trade lower, and then run out to low. If it takes out yesterday's low, it needs to, at this moment, become a large range day. It can't just go below it a little bit, not even like 10 pips. If it goes 10 pips below it and comes back above it, I think that's going to be a not a seasonal, but a short-term low. And then we'll probably look to trade higher for some buy stops, which would take us up into 95.50 level. Euro pound. This one's, in my opinion, wants to go up. I think we'll see 88.75, 88.80. I have a fair value gap right in here. So it looks like it's tried to go lower, rejected. So if we trade above the equal highs in here, I don't see that as just a buy stop run. I think they'll run it all the way up into the low. If I can get this to show up. 88.78. So we could see 88.75, 88.80. Closing up here. Let me put that on the chart. Okay, so that could be the upside event for Euro pound. And Euro dollar. Similar idea, but a lack of a defined gap. We have equal highs in here, the small little open pocket of price action. Now you're probably thinking that Is it really going to come all the way up here just to hit that? It can, because that's a short-term high, and that would be enough. So let's see what that low is. Come on, I don't have patience for this. 115.67. So 115.65 to 115.70 could be the upside draw on buy side liquidity. And if it goes through this little area, let me put it on the chart so you guys can see it. So I think we'll draw to that. And if we look at the range, that takes us up in the optimal trade entry, almost to the 79-cent trade level, which it could spike to. I don't see this low and this downside movement. I don't see that as a gap. I think it's a balanced, efficiently traded price range or consolidation. If it goes above this gap, I think we'll go one more time higher for, I should have another daily. I should have a daily chart on the euro on where it went to. So I think I just closed it out. Yeah, that's wonderful. Let's pop up a chart real quick. And we'll go to a daily. So looking at the daily, we have the old high back here. And should I be wrong about the potential upside today on the event of the news at crude oil inventories and the dollar impact at 8:30, we would be looking for it to trade down into 114.92, 114.95, certainly 115 big figure. Then maybe see some level of capitalization and send it higher again. I still believe that we'll see 116s until we take out the middle of this down close candle and this down close candle's entire range. And that would look like this. So right in here. So we're bullish until we get through 1440 on the downside. I'll create another daily chart when we do the recap. Cable, if you look at cable for this particular day, I mentioned how we moved into an area where it's untradeable and it's moving as indicated. So I don't think we should be doing anything with cable at all. So stay on the sidelines. Don't even look at British pound for now. And let's go over to dollar CAD. Dollar CAD, I think 24.60 is the next downside objective. Really 24.58 is the old low on the higher time frame. If you go out to a monthly, I think you'll see it, but zoom out right in here. Low comes in. Oh, good grief. Yeah, 24.58. So we're just going to use a round number 24.60 as a draw on liquidity. And we just hit the last up close candle intraday. We're below it. Hit it. Could be expanding away from it. ADR low is 24.60. I'm sorry, 25.64. Potential scenario that could unfold today is this. Could send it lower. Even though we haven't had any real runs on buy stops except for this one here and this one here. Well, actually, you could really look at it. It's been 3 of them. this high has been taken here. This high has been taken here. This high has been taken here. So they might be at the stage where they're going to go into some measure of capitulation. A lot of selling, aggressive selling, and they could do it on the crude oil numbers. So if we trade below the low here and then consolidate, watch this level at 25.94, because that may be a catalyst for a sell-off at the 1030 crude oil inventory number. And then we could see not just the 25.64 level. I think we'll see it want to make a run for that 24.60, 24.58 level. So 24.50, I think, is a really more appropriate level. It would be taking out that long-term low and at least try to get through it a little bit. At least even less than 10 pips would put us at 24.50. So I think we still have another sell-off on dollar CAD. I think the trigger would be 25.95, 25.94. It may just come back up to this low here once it goes through. It might be all that's necessary, and then we quickly reprice it. But apart from that, I don't see anything else. So yesterday's low, I think we're looking for a nice expansion below. Now, what kills this idea is we have to avoid getting above 24.50. Let's see. I'm sorry, 26.53. So 26.55 negates that, and then we had to go back below the low. In other words, let me say it like this: if we go above initially, we don't do anything. We wait. We want to see the low taken out here, the lowest close. We want to see that taken out, and then come back to that. And then that would be a potential selling opportunity. And the stop would have to be 26.60. So 126.60 protected buy stop. And then your entry would be around 25.95 with the objective of taking something off at 25, 30 pips and then leaving the stop at 26.60 until we get below 25.50, and then you would go to break even, leave it there, and then try to see if it would give you 24.60, 24.50 as downside objectives. So it's 8:30 now. Let's see what this pair wants to give us. You're still a little messy. Cable again, don't want to touch that one. They'll probably keep it in a range until the crude oil inventories at 10:30. And I appreciate all the feedback I got in the emails for everyone that participated in the moves on Friday and the Euro on Monday. I told you the markets would improve. Just takes a little bit more patience than some might have. This is a scenario I'm anticipating. We go down. Take out the low. Come back up into this lowest close. over here. It should act as resistance. If it does, price should expand on the downside. And it should be immediate. It shouldn't be wasting time to hang around that level. And we'd be looking for this scenario. And the stop here and entry here. And yes, it's a bit of a wider stop, but everything's relative. It's not one you're going to probably do 1,000 lots on. You have to try to turn it down to 500 lots apparently because of the wider stop. So that's the scenario, and I would do a very small. I'd do a very small position with it. But again, the scenario has to be the low is taken out first over here. This lowest wick has to trade through that, not just the body's candle. It has to trade through that and then come back up, find resistance at that down close at 25.95. Now, if you do take this as a case study and you're in it, while the stop is catastrophic at 26.60, that means that's like the safety net. If it trades above the the close on this candle at 26.37, that would be, for me, I would kill the trade at that moment. This is just in case we get some wild spike up there and it makes a run for something like over here. You just got to have some kind of a safety net. But anything above this candle's close, 26.37, if it goes to that level there after you get short, then you want to kill it because it would be a rejection. They're going to make a run for the buy stops over here. And really, apart from that, I don't see anything else that should be looked at. We had a really nice Friday. We had a nice Monday. I don't think there'll be anything outside of what we're outlining here for dollar CAD. So we have a range and price here to here, and we essentially worked off that equilibrium today, which is another reason why I don't like the idea. If we do get the scenario where it unfolds below this as a run-on sell-side liquidity, we want to see it recapitalize more shorts here and then go lower. Any movement above this up-close candle here is no good because we're going back above equilibrium. To do that, what are they going to be looking for then? Buy stops. And we don't want to be doing any part of that business because it would be logically taking out where your stop would be. And then it would run to this level as well, where it's guaranteed to run your stop. And then it may do it rather quickly and reprice and jump to that level and not give you a chance. So as soon as it goes into this candle here, the abort on that short would be at 26.37. As soon as it prints that, you just collapse the trade and lick your wounds. And the target would be 24.60, 24.50 on the dollar CAD. Really? Okay, grief. I'm very aggravated right now. I apologize. I'm not comfortable. It's one. So it's better than 2-1. You get down to 50. It's almost 2 1/4 to 1. Risk to reward. And on the dollar, again, it's crude oil inventory numbers because we didn't see anything so far at E30. Anticipate a run up into this level here. It might spike through up to the close on this candle, so 95.04. It could spike through, but we're watching 95. Wait to see if there's any selling pressure there. And then the target would be below yesterday's low, or 94.45 or 94.40, could expand to 94.20. That may be a target that rolls over into tomorrow, but we're looking for this as a catalyst for selling on the dollar. And then that should prop up one more run on euro up in the fair value gap here. And cable we're not touching. It's in a condition that you don't want to be trading. And I think I've covered everything. Anybody need anything else re-explained about what was shown so far today? Because I am going to escape. What do you need to see? What do you need to have? Okay, dollar CAD. I'm not looking at Aussie. Because we haven't seen the move at the release of the E30 numbers, it may stay in a range and keep yesterday's low and intact. So what we're watching is the likelihood of price moving lower than yesterday's low. If it does, we'll be looking for it to trade back up into this candle's close. If it does that, and it's better if it does this at the time of 10:30 inventories release. So I like to see this low stay here and just consolidate in here, not even get up into this range. Just stay tight, just go sideways. And if it does that, return back to 25.95. That could be a sell. Protective stop would be at 26.60, and the objective would be 24.60, 24.50 is downside. I'm not saying it's going to probably get there today. It may be a number that needs to hit tomorrow or overnight, but that's where I think the longer term draw on, because it's based on an old level over here. I'll just jump out to a weekly. You'll see it quick. It's this low down here, which is actually 24.58. So we'll be looking for price to run to that. Okay. How many people do I think knows about IPTA? I wouldn't even begin to know. I'm sure a lot more now that I've had the mentorship and everybody wants to tell everybody about it. Yeah, it's not like stochastics. It's something totally different. But I know how it is. Everybody wants to feel like Robin Hood and share it with the world. They want to be the next WikiLeaks. Aussie dollar looks like it wants to go one more leg higher. How much of a leg? Well, we have two levels that you can watch. Get this out of the way. All right, that's that. And then we have the high on the body of that candle. Let's use 80-40. It's 80-40. That's what I'm trying to draw your attention to. So we have expansion on Aussie dollar, probably one more leg higher. It takes us up into next level. Today could be 80, 85, an 80 big figure, and an 80-40. Really? You're still going to resist? Look at that. It still wants to freaking keep me from getting out. OCD war. I hate doing it this way. It pisses me off. I wouldn't touch the kiwi. I've already said that before. I wouldn't touch it. I know the logical scenario would be is Aussie's running up higher, so therefore the easy trade would be to get with the kiwi, but I don't like it. I think they'll probably run down below 73.35 to get the liquidity below that, and then it might be a return back to this order block, but I don't want to chase it in here. The better trades in Aussie, it's been that way for months. What pair is this? Aussie, New Zealand. So Aussie versus New Zealand dollar. If this is showing bullish market structure, as I just indicated with the Aussie dollar, we're probably going to see another leg higher with this. So think about what we were seeing here. This consolidation and a run up, that's what we're seeing again. Another consolidation, another leg up. So if this pair, okay, is the base currency is Aussie and it's being quoted in New Zealand dollars, if this goes higher, is that saying that Kiwi's stronger or weaker? Let me say it again. I think I've confused myself. If this pair goes higher, is it indicating that Kiwi is stronger or weaker? Right. So if we're going to be buying Aussie or Kiwi, which one should we be buying? Aussie dollar. So don't be following the Kiwi, because they may keep Kiwi in a consolidation to allow and permit further upside on Aussie dollar to let this pair go higher. Okay, you got to remember, you got to use the majors to figure out what these crosses are doing. And again, if you don't know what you're doing with them, you're going to get hurt. I don't have the time to go into commitment of traders for that, Leo. Summarize the reasons why on Monday you stated Euro-dollar longs looked good. I'm not sure. Did you watch the Monday's presentation? Admittedly, I don't remember what I was given as commentary, but let me check the Canadian dollar real quick. Okay. The euro I'll do this portion and then I'm going to end this session. End. All right. I'll get this out of here. Okay, so prior to today's Wednesday, Tuesday, Monday, this is what Monday looked like when we were watching it. And at the time of the live session, I didn't waste much time at all. I went in and explained that we were in a consolidation. We had moved to the top of the range, and while, yes, that would look like a premium or overbought to other people, institutional order flow was suggesting that we would see higher prices in the expansion and the upside. With the coupling of that 94.75 level, did I say that right? 94.45 level on the dollar being still likely of a target, we were expecting that down move to hit that. So dollar down, foreign currency up. And we were at the top of the range. We had already seen the order blocks here, finding support, stop run. These lows in here were taken. Now, once the stops have been taken, they gathered up more orders. So now we're going to expect the price to expand. And they were keeping it just below the previous week's high. So we anticipated an upside expansion with the weakness on the dollar, and that's what we got. Now we're still looking for 16.50 as a potential upside, 16.15 rather. But the next big figure, 116, is, and I think is still doable for the week. But it was the fact that we had a consolidation. Again, if we go back over to the Aussie dollar, we had this consolidation. We had this consolidation and price left it. We had another little consolidation in here. Price left that. Same scenario here. We had consolidation. We expanded away from it. We're another level of consolidation. We expect to see it make another leg higher. Well, that's exactly what I was outlining for the euro here. In this big consolidation, prior to this move out, we can see where the breakout's going to occur before it happens, where other traders like to see it happen and then trade in that direction. I used the insights that I've been teaching you to tell you where the market was going to go before it did its breakout. So you don't want to be buying up here. You want to be doing it before the expansion. And that was what was the catalyst. So apart from that and the dollar weakness, that was the two things that really led me to the outcome. I needed to basically give you something because I knew a lot of you are itching to do something. But that's that. Canadian dollar still hasn't taken out its low. So we'll have to watch the 1030 crude oil inventory numbers before we see any manipulation. But I'm going to close this one and get prepared. So I got to go get my back looked at, and then we'll catch up with you guys later on this afternoon. I may be a little bit late, so it may be around closer to 4 o'clock with me getting the recap up. So just give me a little bit of flexibility there today, and I'll catch up with you all then. If there's a scenario that unfolds in the dollar CAD, use everything I gave you in terms of the commentary for that idea. Again, 24.60, 24.50 is the downside, I think. And that's it. I'll catch up with you guys later on.